Dubai may not be the best option for you to pay taxes, and let me explain why. My name is Leo. I help online entrepreneurs legally reduce their taxes, and obviously Dubai is a very talked about jurisdiction to set up your taxes. You know, it used to be completely tax-free, no company tax, no personal income tax. Now obviously they've added a 9% corporation tax, and they're kind of going into that direction of getting taxed. But obviously it's still a great jurisdiction, but let me tell you why it might not be the best place for you. If you live in Dubai, Dubai is definitely the best place to set up. If you spend over 6 months a year, no brainer, you have to set up in Dubai. That's the best place to go. The problem is when you decide to spend less than that time. So the two rules for getting Dubai tax residency are, of course, 183 days, and the other one is 90 days. You can actually get tax residency in 90 days if you prove your economic center is in Dubai, which basically means if you've got a company in Dubai that's active, that's operating, if you're renting a place, if you have an active bank account that you're using on a day-to-day basis, that's kind of the grounds on which they're going to give you tax residency on economic center. What happens if you spend less than 90 days though? Because in Dubai, you can get your tax number, but what happens if you just spend 2 days a year? I know in Dubai now you need to spend at least 1 day every 6 months, because otherwise they just take away your visa and take away your residency. But the problem is in Dubai, right? You can pay your taxes in Dubai if you spend about 5 days a year. The problem is your home country's challenge. Your home country is going to be very upset, and they're not going to recognize Dubai's tax residency as a legit tax residency, and they're still going to consider you a tax resident of your home country because you've got a passport, because you've got ties. Like, let's say you're an Italian citizen or a British citizen or whatever, and you're spending like 5 months back home and 3 days in Dubai, and now you want to try and claim Dubai, like UAE tax residency, and not pay any tax. Well, your family is all in England, your bank account is the one in England, your clients are all in England, and you're spending most of your time in England. Like, it's not going to be fine. That's just the thing. It's not going to work. There's also another important thing to consider. The UAE is on Europe's blacklist. It's a tax haven, so Europe observes it very closely. Another thing to consider is that in Italy and in most European countries, I think, there's this rule called, well, I know it in Italian, it's called inversione dell'onere della prova, which basically means that you have to prove that you've actually moved your tax residency instead of the tax authorities having to prove it. So normally, if say you're an Italian citizen and you're living in Italy and you decide to move to the Netherlands, then you just say, hey, look, I've moved to the Netherlands. And now if Italy decide to tax you because they believe that you're a tax resident in Italy still, they are the ones that are going to have to prove it, because Netherlands is just a normal country. But the UAE, they're on the blacklist. So basically that means is that if you tell Italy that you're moving to the UAE, they're still going to tax you in Italy until you prove the fact that you've moved and that you are officially a tax resident in the UAE. But your tax liability in Italy doesn't go away until you've proven it. And that's because it's a blacklist country. So basically the burden of proving that you've left, that you're not paying taxes in Italy anymore, is actually on you because you're moving to a blacklist country. So, thing is, if you spend less than 90 days in the UAE, you actually don't have a way of proving this, because they won't issue your tax residency certificate, which is exactly what you need to prove your tax resident. So, what happens? You spend 183 days, you request the tax residency certificate at the tax office, they give it to you, so now you can prove to whatever country, hey, look, I'm a tax resident of the UAE, I've got this piece of paper. Cool. If you spend less than 183 days and over 90 days, then it's up to the discretion of, the tax office in the UAE to say, hey, yeah, this guy's got an economic center here, we'll give you this tax residency certificate. And this tax residency certificate is so fucking important, because if they don't give it to you, then you have no proof that you're actually a tax resident in the UAE. And the moment you can't prove that you're a tax resident of the UAE, then all the tax responsibility falls back onto the home country, right? The country that used to tax you before has all the taxing rights, like the country of your passport. Maybe you have an Italian passport, a UK passport, whatever, Australian passport. You're going to be screwed. So if you actually want to set up in Dubai, make sure you're either spending 6 months a year or you're spending 3 months, 90 days, and have economic center. So like have your company in the UAE and make sure it's active, make sure you're paying the 9%, make sure you've got personal bank accounts in the UAE. In fact, Make sure you're even renting a place like with a contract properly and you're not just on Airbnb or some random hotel. To be fair, there are a couple instances where this can actually work. Obviously, it's not really legal, but I've seen people do it, where people get tax residency in the UAE. They spend less than 90 days, so their tax residency is just a paper residency, which means they've just got it. They can just put it at the number as, you know, their tax number as tax information. But if they were ever challenged by anyone, then that would just fall, and they would just have to pay taxes on everything. The reason it works is because these people live in, I don't know, Bali, Indonesia, or Thailand, for example. So they never register as taxpayers in Thailand and Indonesia, even though they spend over 6 months. So technically they're supposed to register as taxpayers there. But Thailand, you know, doesn't really know what's going on in the UAE. They don't really care at the moment. I mean, I've seen it. I don't do this myself, but I know people who have tax residency in the UAE. They spend maybe 5 a week a year, 2 weeks a year. They have a UAE company, but they're not spending 90 days. So technically, if they were ever to be challenged, then that tax residency would fall and they would have to be taxed. The reason why they get away with it is because they live in countries that don't really care. If they just see another tax residency, they'll be like, oh, okay, fine, we respect this. They don't care if it's legit or if it's not legit. And because they don't really spend any time in their home country, so if it's like an Italian guy doing this, if it's like an Australian guy doing this, and they spend maybe 2 weeks a year in Italy or Australia, they're obviously not using an Italian or Australian bank account because, you know, they have their Dubai bank account. They don't need to use the old one. Italy, let's take it as an example, they have no power because, like, how are they going to bring you back into their tax net if you're spending 2 weeks a year in Italy, if you're not using the Italian bank account, if you don't own anything in Italy? Like, yes, this is a paper residency and it's shit, and if they ever challenge it, then it can be overthrown. You know, it's like, okay, this is not a proper one, but then they would struggle as well to claim you in their tax net, right, in your home country's tax net, because fine, you don't have ties to Dubai, but you don't even have ties to Italy, to your home country. So then the country that could really pull you into their net is Thailand, Indonesia, Malaysia, Brazil, you know, wherever you decide to go and live in. But they don't, not yet, at least. Maybe they'll start. So yeah, if you're not planning on having economic center in Dubai and actually spending time, don't set up in Dubai. There's plenty of other places. Like Indonesia has been a bit of a funny one for me recently, I'll be honest. But Thailand has a remittance basis system. You can start paying taxes in Thailand. Like, get your tax residency in Thailand. Thailand has a remittance basis system. You're only taxed on the money you bring inside of Thailand. Just keep your money outside of Thailand and then you don't pay taxes in Thailand anyways. But at least you've got a legit tax residency there. Like, if you're spending 6 months a year in Thailand anyways, then why don't you just set up in Thailand? Open an offshore company, keep your money outside of Thailand, and there you go. Then you don't pay any taxes anyways. But if your home country challenges you, then you have an answer to give them. Hey, I'm paying taxes in Thailand. This is my tax number. This is my tax return. I'm not paying any tax, but that's not because I'm evading. It's just the rules in Thailand, but this is where I live. Hey, Thailand is a sovereign country. They have their own rules. I'm just following their rules, which is fine. And Thailand is not a blacklist country. So you can actually just move your tax residency and your residency. And then if Italy or Australia, you know, England or whatever, they want to say, hey, I think you should pay taxes here, then it's on them to prove that you actually not moved to Thailand and not on you to prove that you have. So if you have any questions, just drop them in the comments or send me a DM on Instagram. If you want my help to reduce your taxes, move to Thailand, you know, whatever, probably click the first link in the description. There's a free 1-hour masterclass, everything you need to know about paying no taxes as an online entrepreneur, or, you know, very, very little. So yeah, hope you enjoy it and see you on the next one.